Hello everyone, my name is Marcello Colax, and today, as always, we're going to have a look at the European energy markets, this time for the week starting the 31st of July 2023. Before we start, just one little thing. If you make it to the very end of today's video, I have a little surprise for you. I am actually planning to do a free webinar on technical analysis on a very specific topic. So if you have ever wondered if TA even is the right thing for you, then stay until the end, and I have a little bit more detail for you then. All right, as always, let's start with the TTF front month. That was quite a week, and also quite a few weeks that we've had previously. So it's always worth zooming out and starting on the weekly chart. So here I keep saying the exact same thing over the past couple of weeks. Mid-term downtrend is intact, below the 200-week exponential moving average, and within this descending orange trend channel. We do also see that the MACD, the moving average convergence divergence, has been moving higher while the market continued to move lower. Now we seem to be in a little bit of a near-term sideways trend, but overall this year is called divergence. So the market is moving lower while the indicator is moving higher. That simply means that the bears are not in it anymore all that much. So let's have a look of what's going to happen in the next couple of days and weeks. So we do see that from this longer term downtrend, actually a couple of weeks ago there was the option to redraw. This is a little bit off like this. There was the option to redraw the trend channel a little bit. So initially it was based on this and this descending peak and this trough. However, there is the option to redraw the entire trend line to include all of it. This might seem a little bit more inclusive. Now, is there an advantage in this here? Not really. So we can redraw this line, but does it have an actual impact on any trading decision that we are making right now? Probably not. So I feel we can leave it either with the new latest, this is already from mid-June, or we leave it at the old peak and we see that the market is resisting against this. So either way is perfectly fine. There's truly no advantage to either channel drawing opportunity. Let's just put it here for now, just for the fun of it. Okay, so zooming in, this might have been a catastrophe for quite some traders, because overall we are still bearish, but we did see this near-term up leg that lasted from the start of June for 2 weeks. We had a little bit of a sideways trend, right, with no new peaks and no new troughs being made. Then we broke a little bit lower and higher immediately. So what is this? Well, to me that looks very much like a triangle. And with a triangle, we try to move in a zigzag in order to draw in a triangle. Let's do it like this. And what triangles are doing, they simply reflect that the market is moving in an increasingly tighter range. So there is not much of market strength in here already. So and the market is most likely to move in an increasingly tighter range. Here I wouldn't really trade on the daily time frame. You'll be thrown in and out of the market at every corner. So once we have a little bit of a sideways or a converging range identified, it would make sense to go onto the hourly or the 15-minute time frame and try to trade with these swings as they appear. Because I don't know if you can justify to your trading manager to not take a trade since, I don't know, for like a month or something, right? So zoom in, and if you have the option, maybe trade within these boundaries. What I see happening is, so first of all, triangles do not have an inherent breakout direction. So they can either revert the preceding trend, which means breaking higher, or they can continue it by breaking lower. So what I would do, I wouldn't really look all that much at just a little break above or beyond this triangle. I would really go for looking at exactly the preceding peaks or the most recent trough, which are the important levels that we actually want to look at. So in our case here, this is the trough from the 17th of July, and it is the peak from the 26th of July. So here's one little thing that seems to be a textbook recommendation. It's not a recommendation, it's just what generally some traders tend to do. Once we break above, or let's say a little bit below the triangle, what we can do then is we can maybe make some resources available or pay a little bit more attention or maybe put on a little bit of a position. But I would really wait for a bullish break until we actually make it above 34.35, or until we actually break below this entire range, which goes from like 24, 22.5. So be careful. Other than that, I do believe that the market will keep moving within this triangle. What I find very interesting, so there isn't an inherent breakout direction right now. As you can see, in those sideways ranges do not take signals from moving averages or tools based on moving averages. That counts for Ichimoku clouds, or Bollinger Bands, MACDs, any sort of like EMA crossovers and all that, because as the market flatlines, so will all the tools and give you a lot of false signals. So don't look at any of this right now, yeah? So I'm putting the MACD away right away. What would make a little bit more sense is looking at looking at oscillators, where you can maybe anticipate the peaks and the troughs for another swing. And for this, I would really ask you to go into the daily time frame in order, for just to have a little bit of an easier entry and exit. Once we do break below or above any of these boundaries, I would recommend then to look at momentum tools. Then we can start looking at the MACD and see if we get a bullish signal or a bearish signal. I like the DMI, the Directional Movement Index. Green above red means the bulls are in charge, and red above green means the bears are in charge. You can see we are flip-flopping. The bulls are a little bit in there, but not really. And what we really want to see is we want to have a look at this white line. So the white line is called the ADX, the Average Directional Index, and it simply shows us above 20 the market is trending, so we've got a good trend going on, and below 20 it means the market isn't really trending. And what I would like to see is if we break, let's say, above 34.35, that would mean a break above the triangle, a break above the preceding peak, and a break above the long-term descending orange channel. Yeah, then I would like to see the ADX to move higher to also confirm that the market actually is moving into that direction. Below here, we do have a lot of resistance also going on. So first of all, we have 24. It is a psychological level, and it is the most recent trough. Then of course we do have the 22.5, 22.85 area that I've been looking at for quite some time. So we need to break below this as well. So you can see on the support and on the resistance, we do have quite a bit of strong levels on both sides. So what do I think? What would I do? Probably nothing. Probably intraday. I would try to go with the little legs, but I would really sit this one out. Okay, let's have a look at Brent. Exactly the same, but I feel sometimes I do neglect Brent a little bit. So let's have a look at this to give you a little bit more precise levels. So here as well, I was first thinking, oh, can we adjust this a little bit? But then we're a little bit off here. So for Brent, actually, I do enjoy this. We have just this little fake breakout here a little bit. I am removing this former support level that has now turned into resistance, but it's been broken quite a few times. So I'm also removing this. Here the idea is exactly the same. So what I feel is important is the most recent peak and the most recent trough. I want to see a break below either, past either level in order to get any directional clue. Let's have a quick look if we can draw in a triangle as well. A peak, a trough, a peak, a trough. There you go. And you can see we are, so by default, triangles are usually resolved 2/3 into the apex. So that's the apex. This would be right now, or maybe even a little bit earlier, 2/3. But here's the thing. So I've been in the European energy markets for a decade now, and what I see happening fairly often, this applies to the TTF as well, that those triangles, even wedges, they just fizzle out. So what I see fairly often when you have a really good like basing pattern happening, what usually happens in European energy markets is that we really just like without any sort of conviction just fizzle out to the side. And then, of course, the market has to be reassessed for a real direction. Yeah, but don't be. That's why I don't really want to go with the triangle break. It is definitely a useful tool. It will make me pay attention if we break past either side. But what I really want to see is the peaks and the troughs. Okay, so what's important here? We've got 86 on the upside for a little bit of resistance, and we've got a 58.5 for support. Okay, let's look at one more market. I don't want to make these videos too long. Let's have a look at Brent. So my Brent forecast was pretty much bang on. I like this very much. So let's zoom out. Once again, just reverting back a little bit so fast to like take a breather and see where we have been. So in June 2022, we peaked. We've been moving lower and we have been going sideways for all of 2023. Once we did resolve the sideways range lower, and we just shifted lower for since May, and we just broke higher. And these here are still my old arrows, and as you can see, this here worked out pretty nicely. So what was I saying? I will just remove these so we can put on new nice ones. So we did break above this range as expected, so that was good. If you've been following me, or if you talk on LinkedIn, or if you're talking to me on a daily basis, then you would have seen that I got fairly bullish as we resolved this range higher. I was thinking that we could definitely make it above the 200 exponential moving average, which is a very important psychological level. And actually, yeah, we did test the old resistance that now turned into support. We broke higher. We tested this old resistance that turned into support. We are moving higher. And for now, looking back, I do not see anything in the way until here. And I would have, this is not a trading recommendation, so I would have stayed probably this is the first candle, second candle, yeah, probably after the first day, my recommendation, I believe, changed to bullish. And yeah, I do believe we could make it all the way to, what is this, 87, 88? That isn't all too far-fetched right now, especially since these levels held. One thing I want to mention, let's talk a little bit about the psychology. Why does resistance turn into support? Why does resistance, once broken, turns into support? Well, just put yourself into the shoes of the people who are making trading decisions in the market. So we can see, let's imagine, after a few swings, you have kind of figured out, okay, so this here is a range. So if I'm trading, intraday or just a little boundaries, I do buy if we are down here, and then here I go short, yeah, or just sell. Let's imagine you can go short, and then I buy down here. I let the market go all the way up, and then I go short, then all the way until down here, and then we go, okay, so you know what, this has worked out like 1, 2, 3, 4, many times before. So we are here again, I go short, but the sentiment changes. Oh man, we are above it now, and I'm still short. So here's the a little bit of a risk aversion psychology behind this whole thing. Okay, so I went short here. I'm not doing well. The market moved all the way up. So what do I say? Okay, so I'm in minus right now, but I only want to close this position if at least I get out at zero. At least I want to be at break even. So if the market just has a little bit of a downwards, you can see it's just 2 days, yeah, once we approach this level again, okay, I get out of it, I buy back. And this is then fueling the most recent up leg. And also, the people who were on the sidelines didn't really do anything. They saw the market break, and then they went, oh man, now I'm too late. So instead, they go and say, you know what? If the market falls back below here, I get a second chance at buying because we broke higher already, and I think we'll move higher even more. So I want to get in at the best possible point. So if the market is back below here, then I buy. You see, everyone's buying. The people who want to cover their shorts, they're buying because they feel they made a bad decision. They want to get out at even. And those who are bullish, they think, oh, this is a good price. We're definitely going to go higher, right? And that's why I found like this resistance level turning into support so meaningful as well, because this will easily fuel us all the way until 88, I believe. All right, that was it. It was a little outlook. I try to keep it fresh, moving it around in the contract, so I'm not always talking about the same thing. And as promised, here is my little gift to my community. So I've been in the industry for over a decade, and I've always tried to help traders and analysts in their quest to make better trading decisions. Just a couple of weeks ago, I'm based in Singapore, by the way. I was at a university giving a guest lecture on technical analysis to portfolio management students. I've been helping a lot of you people who are probably watching this. Quite a few of you. We had our one-on-ones, and I hope it did provide some value. And I am doing these videos here and just trying to help out. And I truly believe that this is turning into my life's work. So I think why not go one step further and help a little bit, a broader audience. And what I have planned is a technical analysis, just a webinar session. So there's nothing in it for me. I'm not trying to sell you anything. There's no money. This is not in combination with any sort of company or employer. This is not sponsored. It's truly 100% just me, Marcello Colax. I'm doing this, I don't know, out of the goodness of my heart. So truly there's no affiliation with anyone or anything. So I have planned a little webinar on the 10th of August, which is in 2 weeks. 5 p.m. Singapore time, 10 a.m. UK time, 11 a.m. Europe. It's 40 minutes. I want to keep it short, and it's online. And if you fill this out, so I want to get you to know you a little bit better, then you will receive an invitation. This is limited to the first 100 signups. Why is that? Because, well, quite frankly, I'm working with free software and there's a limit to it. So it is limited to the first 100 people. So to avoid disappointment, just sign up as early as you can. What are we going to talk about in the very first seminar? Well, it is technical trading in the fundamental market. Because over the past couple of years, I have heard a lot that, I'm trading energy, Marcello, so it's a very fundamental market, so technical analysis does not apply. Or, hey, Marcello, I'm just a physical LNG buyer, TA doesn't really apply to me. Or, hey, Marcello, I'm a, German utility, we only buy physical, so we do just very basic hedging, if at all. So we don't need technical analysis. So I've heard this a lot, so I hope this seminar will help you maybe broaden your mind, maybe make you aware of whether or not technical analysis can actually help you, and then you can make your own informed decision of whether or not that is something you want to continue looking into. Once again, it's really just me, and I'm not trying to sell you anything. Not gonna try to convince you of technical analysis. This is up for grabs. I will post the link in the YouTube description. I'll post, if you watch this on LinkedIn, I'll put it in the description as well. And if you are watching this from the private WhatsApp group that I'm running, then you will see the link in there as well. So we've got 2 weeks left. Please do sign up. I hope you enjoyed this. Thank you very much. Everyone, have a great start into the week and see you around. Bye bye.